who can join in the conversation. We're on Twitter. Just use the hashtag at the bottom of your screen or email us yourmoney@skynews.com.au. We'll try and answer anything you do send to us. Julia, shortened trading week, negativity regionally, but we posted, well, modest gains.
It is a shortened trading week, but extremely light volumes coming through today. We only saw $3.5 billion worth of stock being traded. So not a lot of volumes going through, but outperformance today. But really the Australian market just simply playing catch up over that long weekend. So we saw our market up by 0.2% today. But if we have a look at how the likes of Japan, how they've traded over the last three sessions, on Friday, Japan was down by 2.1%. On Monday, it was up by 2%. And then today we saw it down by 1.2%. So Australia just simply playing catch up, and of course over the long weekend what we have seen is an inflation of risk assets, and then today a very quick deflation of risk assets once again over that Spanish bailout. So a very short-term response in terms of the positivity that announcement about the Spain bailout has had to risk assets. And if we have a look at performance of different sectors today, well, the underperformance today were the telecom and the material sectors. So no clear trends coming through, but capital raising certainly in focus. Last week we had Brambles and 10 coming back online, and of course today we've seen Echo Entertainment going into a trading halt. So we have seen a number of capital raisings, but no real clear trends on today's markets, except that it was very quiet. Michael mentioned obviously one of the key events, if you like, or issues very much in focus for the markets is that bailout request, if you like, from Spain. Do you expect that to continue to be a dominant theme in markets? I think the problem with the Spain bailout is the lack of details that we've seen, and that's the key problem, because Spain has indicated that it does still want to continue with its bond auctions, and it's a big question for anyone wanting to buy into Spanish debt. Well, how is this bailout going to impact? Are we going to see the ESM or the ESFS, I guess, loans ranking above debt holders or bond holders for Spanish debt? So if they are going to continue the Spanish debt auctions, the question is how much demand there is going to be, given the risks involved, where the market doesn't know exactly how things are going to rank or how things are going to be structured. In terms of this Spanish bank bailout, it's all about confidence and re-injecting confidence to that Spanish banking space, because one of the features over the last month has been the enormous amount of deposits that we have seen exiting the Spanish banking space as well as the Greek banking space and going into places like Germany, as well as the Finnish and the Dutch banks as well. So this is designed to reinstall confidence so we don't get any sort of bank run. But I guess it also raises a question around debt ratings, not only of Spain, because if we do see it going towards the mechanisms that the market is expecting, and that's through the FROB, which was built to be able to, I guess, give this money to that banking space in Spain. Well, it's going to add to Spain's debt. So the question of the Spanish ranking in terms of debt and what it's going to do in terms of helping it to raise money in the future. And then, of course, those mechanisms, the European Financial Stability Facility and the ESM, it's got a ranking of AA+ at the moment. But if it does need to issue debt, then do we see that ranking going down and debt becoming more expensive for these facilities to also borrow money? So lots of questions out there in the market. In terms of this bank bailout, I think it is a positive thing, but because there are so many questions and it is really dependent on those details, the market's still waiting for those details to come through. If you like, and reported expectations for capital raising, and do you see more coming, and do you think that they provide an opportunity? It isn't too surprising, given the softness that we've seen in a lot of different markets, especially that retail space, the media space, and a combination of a high amount of debt with a very soft market that you're operating in is quite a lethal combination in this type of environment. So if we have a look over the last few months, we have seen a number of profit downgrades coming through from some of these cyclical businesses like Toll Holdings, JB Hi-Fi, Myer, Seven West Media. And if these companies also have high levels of debt and they don't see an end in sight or a forecast end in sight to the softness in the conditions, well, these are the type of companies that you'd expect to go to the market to be doing a capital raising. So we have seen last week Brambles and 10, they were a little bit different in that they had been looking at asset sales, and it's just not a very good environment to be selling assets into. So I guess these capital raisings give them a bit of a buffer to move. We're seeing Echo Entertainment in a trading halt at the moment, and they're looking at a capital raising. But of course, the main driver of that share price is going to be takeover speculation, and to see whether Crown or Genting Singapore see an increase their stakes in Echo and just really ramp up that takeover battle a little bit more in Echo Entertainment. So we'll be watching that one. But really, you're trying to avoid those companies with high levels of debt as well as a softening business, and that combination really not good, especially if you've got a high level of gearing. It really acts quite strongly against you with that high operating leverage.